Hello, good morning, and welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Tuesday, the 2nd of July. Now, we've got a fairly cautious look to market open today. Nothing too decisive in terms of direction. It looks as though the positive sentiment that we had driven through the markets yesterday from the G20 meeting has just dissipated slightly. Possibly it's something to do with the fact that the move has naturally played out, or the fact that we've seen the US, which has started to turn attention back on the EU again with more tariffs there. So it just sort of regains the momentum of this tariff situation that the markets are so fearful about. So there's an element of caution coming back in. You've seen gold that's rebounded this morning, now around $8 higher. And you've seen the yen starting to regain some ground as well. And the dollar's just unwound slightly some of its gains that it saw yesterday. That strong move to the highs just tipped over a little bit today. Nothing too decisive, but a little bit. And it's interesting that we saw into the close yesterday, the S&P 500, for example, jumped higher at the open and then just drifted back a little bit into the close. And you can see the fact that futures are now actually a tick or two lower on the S&P 500 today. We've seen the DAX, which has rolled over a little bit. So the momentum in that bull run higher on these equity markets has just dissipated slightly. This is an interesting move, the Aussie dollar, which we had a Reserve Bank of Australia rate cut today, but the Aussie is higher, which I think is a little bit of a surprising move. Maybe the fact that the market had been anticipating it fairly strongly anyway. But I think that how the Reserve Bank of Australia Governor Lowe now sort of lays out policy in the coming days and weeks will be interesting, because I think that the market is still anticipating probably another cut from the RBA, but just how that comes through and how strongly the Governor Lowe sort of hints towards that will be key, I think, for the Aussie. But certainly at the moment it's holding up fairly well. Also, we're looking at oil, which is consolidating. It's had the OPEC meeting in the last couple of days, an extension of the cuts, for the production cuts by another 9 months, agreed by OPEC yesterday. Needs to be also agreed by the OPEC Plus members as well, i.e. basically Russia, and that's today. So you could see a bit of a traction off that this afternoon, but at the moment just holding ground. But yeah, it's a fairly sort of cautious look to markets today. In terms of data points, we've got pretty much just the UK construction PMI at 9:30. That's around about 7%. Accounts for around about 7% of the UK economy. So not a great deal. But I think given the fact that the PMIs in the UK have been pretty disappointing recently, I think if the construction PMI does start to rebound a little bit, I mean, it's still in contraction territory at 49.3. If it improved from that, then you might take a little bit of support for sterling. But at the moment, sterling is under a little bit of pressure. Now, we've also got John Williams from the Fed speaking today. He leans a bit hawkish on the committee, so it'll be interesting to see how he sets his stall out today. And he's also a voter at 11:35. He's speaking. Now, my chart of the day is the US dollar Canadian dollar, or dollar CAD, and dollar CAD has been down for the last couple of weeks, really, putting pressure on the downside. But look at this, 30.65. Now I'll open this out, and you can see the importance of that as a support. 30.65 area, basis of support back in February. Turn of January to February, and it's interesting that this is coming as the RSI has hit 30 and turned higher. The market has now rebounded yesterday. Obviously, we had that stronger dollar move. Rebounded yesterday, broken a downtrend. RSI ticking back from 30, ticking higher from 30. Stochastics rolling higher. So is this a point at which we're going to get a technical rally? 32.25 area to 32.50. That's a key band of a pivot. If I open that out, you can see that numerous occasions the market has turned around from that point. So 32.25 to 32.50 is a pivot on a long-term basis within in the range, really, on dollar CAD. And the fact that we've turned higher with momentum indicators ticking up, is this a point at which we're going to see a technical rally? Now, I think you'd want to see a move above 31.50. I'll get the crosshair on 31.50, which is a bit of an old basis of support through late June. become a basis of resistance now. So a move above that would be interesting. You've got momentum indicators on the hourly which have ticked into a more positive configuration as well. So there is a slight air of improvement going on in dollar Canadian now. So I think that this will be an interesting one to watch. Certainly considering we've had a dip lower, and if the market now ticks back higher again from that move back to 3104. Is that a little buying opportunity? So I wish you good luck in your trading today, and I will speak to you later.